What is going on, squad? Let's do this, baby. I got the leaders list for you. Yes, sirree. And of course, we're going to go over the interest rates. We're going to go over the sectors. We're going to go over a little bit of everything. We're going to try and do it under 20 minutes. We'll see if we can do it. Anyway, let's get right into it, baby. All right. We're going to jump right into this, guys. The S&P 500 still stuck in this channel. This is the weekly time frame. This gives you a better understanding of where we are at in the whole current market. We aren't in the highs. We aren't in the lows. You can see we're just kind of traveling in this channel. Everything still looks a-okay, in my opinion. Of course, in due time, if we look at the daily time frame here on the S&P 500, you can see right here, we're right back down on that 50-day moving average. Very, very important that we try to hold some of these moving averages and create a new higher low at the $600 psychological area in the S&P 500. I would like to see it bounce there. Of course, the market does not give a crap what I think, so we'll see if it does want to hold. Either way, we're using this as our new higher low at that 590. As long as we can hold above that, I would say that the bulls are still in control. We'll see what the bears can do with this. With that being said, we're going to jump on over to the interest rates and see what's going on there. And then we'll get into the deeper leaders list.
Interest rates with Jerome Powell.
Oh, yeah.
All right, so here is your Fed minutes, of course, with the economic calendar coming out and letting us know that the jobs data and the unemployment rates were looking a little bit better. You can see we got a little change in the data here. It looks like in June, we're starting to get a little bit more of a better forecast here of coming down. So I think it was July is when it was more forecasted to come down 1/4 point. It looks like now June looks a little bit more closer to that 50-50 ratio. It's actually even creeping into a 0.5 percentage, which is very interesting. But of course, with the interest rates leading to a sooner cut and possibly 2, maybe even 3 cuts by the end of the year, you're going to see the market liking that. Less people having to spend the interest, so much money on interest. They can spend more of it on productivity, whether it's for work or building new infrastructure or hiring more people, either way. So you can even see here in May, we actually have a small chance for that 1/4 rate point cut now, as last week we did not. And as the data comes in, you're going to constantly see a change in that, and you'll understand a little bit of the sentiment that comes back and forth into that market. You can see right here, here's the unemployment rate starting to go down as we keep our unemployment numbers low and we try to keep our inflation at that 2%, like old Papa Powell likes to say. Of course, while we're here, the economic calendar, keep in mind on Wednesday, February 12th, we have Fed Chair Powell testifying. That can get things pretty rampant. So can the CPI. So Wednesday is a big day. It says Tuesday, Fed Chair Powell testifies. I think one of those is more important than the other. That we'll have to wait and see. I think this is behind closed doors, and this one is actually on air. And then, of course, your initial jobless claims. It's been known to move the market, so pay attention to that on Thursday. And then Friday, your core retail sales and your retail sales. So nothing too crazy there, except for Fed Chair Powell speaks, ladies and gentlemen, of course. So make sure you're keen onto that. Of course, I want to show you what we got going on. This is year to date. So since year to date, since the tariffs started to come in, since the transfer of power, so far we're just seeing an overall bullish market. You can see everything so far this year is up. You can see financials have done the best. Energy lately has been very volatile, but you can see communication services, financials, and healthcare, they're all getting a big push higher, as well as utilities. some. I mean, the energy, of course, it's going up there, but it's just very volatile, very volatile. So that's what we got in our sector tracker. So we definitely want to keep an eye on the communication services and financials. And we've been talking about healthcare for a while now. If you guys remember, if we look at XLV, we talked about this being the Goldilocks or the danger zone, as I like to call it, because if we zoomed out here, which we did, you can see that this had an area of interest multiple times. And I said, I know we're below all moving averages here, but I would like to see a bounce somewhere in this area. And we got it. And now look, it's getting tight, creating this cup and handle type of pattern. And if this healthcare can continue to head higher, I got a few leaders in here like AXGN and CDNA I would like to take a look at. But before we get into that, I do want you guys to take a little peek at my screen here. If you haven't already, go to David Worrell. Just type it in at the top of YouTube. Go to David Worrell, click on the face here, and make sure you subscribe. We have plenty of free trading schools, plenty of free thing. Everything here is free. Of course, if you want to have a quick mentorship with me, we do hour-long mentorships. And you're more than welcome to reach out to me in my link tree. And you can find that link tree in any
If
video,
a man really
even
hated
the one
ads,
you are watching right now. You just go click on more, and the link tree is right here, guys. You want to use TradingView like I do? Click on the TradingView, use that link. That'll help me out. This is our Discord. You're more than welcome to join as long as you have an open mind and a heart of gold. And of course, I always want you to check out our Facebook. Our Facebook group is absolutely amazing. So happy to be a part of that, Swing Trader Strategies. And I hope everyone here gets a chance to go join. So go ahead and do that in my link tree, and we will see you guys there. Next up is going to be our Discord. On Discord, if you guys aren't aware of it, we have some awesome charts. We have some amazing things in our Discord. So if you want to see it happen real time before we go live, check out our Discord. But there's one gentleman in our Discord that's been up and coming with his charting, and that is...
Oh, I see you over there. You got problems? We've got the beef.
That's right, it's the beefiest, it's the stewiest, it's your boy Beef Stew. He's been with me since day one, and I tell you what, he has been through it all. And look, he has been charting his heart out. And I'm just going to bring up one because, I was going to talk about RBRK, and you can see right here, guys, I'll open up in this browser. This is the way he's charting. He's also using the trading view, and you can see just how pretty this is. One thing I like and one thing I don't like about RBRK, I love this base. I love how it's retesting that base. I love that it's in a beautiful trend upwards. These earnings, I mean, it's not the prettiest thing. We are starting to see the EPS growth, 48%. We're starting to see some good growth in the sales here. So I like to see that. Of course, I don't like to see all this, what I would consider borrowing here. But yes, we're at this base. This is something that I love. It's a faster mover, over 4%, 5.18% ADR. The Beef Stew, he is putting out some amazing looking tickers here. And that's just one of them. There's many more in here. ADPT, a nice basing area there. 8.30, much quicker. And yeah, I have ARM on my watch list too, so we're definitely going to be going over that. So yeah, I like to see a lot of the times when I do my charting, I don't look at anybody else's in our Discord. I go through the free scanner that we give to you guys right here in the weekly scanner, and then you just download this and you put it in your loadout here. And when you do that, you run through it, and then we meet back up in the Discord and we talk about all the best base and trend breakouts. And of course, we do that all for free in our Discord, so you're more than welcome to join. But be careful. Discord is full of scammers. I will never reach out to you. I will only talk to you in that general chat. You got to be really careful. I don't want anybody getting gotten. All right? So with that being said, we're going to go through the leaders, and I'm going to do a new segment very soon on the leaders. I'm telling you, since we switched to the leaders, we've been kicking ass, we've been taking names, and I hope that you can do the same. Bada bing, bada boom, you'll be making money soon. Let's go over some of the leaders here. I have taken some out from last week. I've added some, And we have some more speculative stocks that I do want to go over as well. CYBR. Now, of course, you can't play this one, but there was multiple areas, basing breakout, trend breakout, trend breakout. This thing is rip, rip, tater chipping to the north side. That's exactly what you want to see when you get a hold of one of these leaders, and it's still leading. So we also have Meta. Now, you're going to hear me say a lot of this. So I have good news and I have bad news about this watch list. But I think if you stick around for a minute, you're going to see what I mean. Here's the Meta. We've been talking about this being an absolute leader right in these areas when the overall market was pulling back. This thing was still holding up, making new higher lows, creating a beautiful base at this 545. It broke out and it happened again. Base on top of base on top of base. This thing is breaking out. Absolute beautiful. It is a leader, definitely a leader in this market, and it's doing really well. But no play here either. There's no play on this. We just have to let it go, because unless you have the base and you've taken this breakout, you have to let it go. We also have Wix. Wix is back in its area of resistance, under its area of resistance. That resistance did not act as support, and you can see we're below a 50-day moving average. Now, we still have EPS and sales growth, but I want to see strength. I want to see it leading, and right now it's not leading. And I'm going to leave it on here until it breaks this area of support at 207. But if it trades sideways any longer and we get into an SMMT type of a ticker, just kind of trading sideways forever, I'm not going to sit in here and watch that happen. So we'll see what happens here. And we might be taking this off soon if it doesn't do something. I also have INTA. I can't help but like this stock. Even after this big, I mean, look at this. This is a huge shakeout right here. Shaking all of these people out, stopping people out, and then getting bought right back up. It's getting tight right here. I like this basing breakout at 73. And you can see that, their trajectory, their growth is constantly growing. You can see the change in their overall sales and EPS. It's always growing. So it's nice to see. It's nice to see. I like it. I hope you like it. Put it on your watch list. I'm going to go over here and just set my alert at INTA. We're going to set the alert 73.50. We'll go just under 73.50 at 73.43, and we'll see what happens. Now, Root, this is going to bring up a lot of things. I know Dan Bot and Beef Stewie were talking about Root and about how a lot of these cups recently, and I noticed this as well, are breaking out without putting a handle in. And I remember Swolzenberg messaged me and he said, hey, look, we have a cup without a handle. What do you think about this? And before I went over our chart, I was looking at Root and I thought to myself, hey, I really like this Root, but what I don't like about it is there's no handle and it's extended from this 10-day moving average. Right here's the 10. And, if we zoom in on this, you can see it's pretty well extended. Last time it was extended like this, look, we got a pullback, And so now, obviously, past performance doesn't mean it needs to repeat itself, but it is a repeat offender. You can see it hit this area multiple times. Now, look, it's hitting this area multiple times. This very well could come back down. And I'm not saying it's not going to go straight up through this through the top of this, because it very well could. But in order for me to play this, I need to see that handle. I need to see it handle out. I need to see to have the 10 and 21 day moving average. But we have seen these cups without handles working out for us very, very recently in this market. Okay. So keep that in mind. Root looks good. It looks good right here, especially from past performance from other tickers. But I, for a play, would like to see this cup kind of base out here. And on the weekly time frame, you can see it looks pretty good too. Nice cup. It's under that 30%. I measured it earlier. That's actually saying it's over that 35%. So just keep that in mind. It is a pretty deep cup, but it looks good. I like it. New higher lows. We're going to see what happens with Root here. The play for me was this basing breakout, and I totally missed this. This would have been a beautiful play if I would have had the cojones to take it. 30% right there, bam, right there. You would have been half out at all-time highs or close enough to it. Take half out, move your stop up to break even, bada bing, bada boom. Next up, this is Rocket Lab. So Rocket Lab, I haven't given up on it yet, because if we look at the overall trajectory of Rocket Lab on a weekly time frame, you can see it's just getting tight here. We've got 2 inside days right now, and one more inside day. I'm telling you, one more inside week. I'm telling you, this thing could really get going. Now, the market doesn't care what I think, but look at what I have drawn out for you. The original best case scenario showed a very nice tight top at 28.20, and for it to bounce off of it. It looked like we overshot that. Now we undershot that, and we're right back into what I drew out for you guys a while ago. So like I said, if we can get another few tight days, 3-4 tight days right here, so we get another week of tightness, that would look amazing, especially on the weekly time frame, where we would have another inside bar 3 weeks tight right before this basing structure explodes. So yeah, I think this has another leg up in it. It's got the EPS growth is a little iffy, but the sales growth is very, very nice in this quick glance at the financials. You know, I'm no mathematician here or anything, but you know, it looks like their net income is down as their revenue and net margin, it has came down this year quarterly. It's looking pretty similar. So we're not looking at the best financials here for Rocket Lab. I'm looking at this structure more as a technical pattern. BYRN, this one is one that we've been keeping an eye on. This is the weekly time frame. To me, it's just getting really wide right here. I don't really care for it, but I'm keeping it on the list. RDW, this thing also is trying to hold the 21-day moving average. Nothing really tight here, but definitely a leader. HWM, we're just keeping this on as a leader because it is definitely leading. It's not the fastest that you'd want to play. Hood, this basing breakout, still leading, still doing really well. If you're using that 10-day moving average as your stop on the daily time frame, you can clearly see it's been holding up. It's showing momentum. You have not had any real reason to sell your last half on this because it's never closed below that 10-day. So the strength on Hood is absolutely enormous. And, you know, shout out to Jolene for actually pointing this basing breakout way before it happened. And for the longest time, I thought she was holding that, and she was not. And so I'm hurt. I'm hurt by it. Bros still continues to climb. I mean, we talked about the trend break, the base break, the trend break. We've talked about this multiple times. So we've had multiple times and areas that we could have gotten into this, but now it's just, you know, we have to wait for another setup, or we just let this thing go on, you know. Now, this is what I like. SE, this is getting really tight. It's almost like, you know, you got your cup and then your handle here. This was really your handle, though, to be honest. This is kind of a base on top of a base now. But I like this SE. I like how it's getting really tight here. I like the numbers on it at first glance. But again, you know, I'm not a financial advisor. I'm not a mathematician. But it looks like we're actually creating and generating revenue and sales and EPS growth. And, you know, it just looks good. And this thing, obviously, the trend is your friend. It's trending higher. Everything, you know, everything's backing this thing up. Ugh, excuse me. Ooh, sorry, guys. It's getting late. Been working a lot. And then we have Reddit. So I took half out of Reddit. Here's our beautiful base breakout. And you can see here, this thing really just took off. We were up 25.30%. I got close to a 5R on this. So I made 5 times my risk multiple. So meaning if I risked $10, I made $50. Okay. If I risked $100, I made $500. All right. If I risked $1,000, I made $5,000. That's fractal. That's why we say 1R. So I got 5R, took half out. So I locked in 2.5R. And now I'm using that last 2.5R, and I've brought my stop up to break even. The trick is, though, earnings is coming up on the 12th. So what am I going to do? I'm going to probably cut another piece of this or hold the last half because I have a higher than 10% ratio going into earnings. So if the earnings comes out and it looks good or you know, it's whatever it expected, I'm either going to stop out for break even or this thing's going to really get to ripping and I get to hold on to it for my last half. So we'll see. App is still on here. Earnings is coming up as well. I think that's also on. No, it's a little bit further down here. Let's see. Looks like February 12th. Yeah. Okay. So February 12th. This basing breakout didn't really get the push that I wanted it to. It's got the numbers. I like the numbers. I like the name. It's definitely a leader, but is this thing going to have what it takes to continue? Google, here's a great reason why we don't hold on after earnings. We made a little bit of money playing this. It turned from a trend break to a base breakout, and there was a little bit of money to be made in here. Not much, but as long as you sold before earnings, you were safe. That's why we have rules in place. I don't care for BTSG right now. It's just doing its thing. Net is definitely a leader. You can tell they're showing it in their numbers. They're showing it in their gap up and then holding that gap. It's looking good. I really like it. We also have AS. I'm just waiting for this thing to set up. I like the numbers. I like what they're doing. AS. Now, we got Erica still over here holding this thing up. Leaders lead, guys, and you can see a huge gap up here, created a really tight bull flag. We got into this thing. I used NFLU, a 2X leveraged ETF, to help play this. Netflix is doing it, guys. Look at, they're the leader. It's blue skies from right here. There's no telling how much higher they can go, but I'm probably going to be taking out half sometime, within hopefully the next week, but we'll see. I think I'm only at 1 or 2 R right now, so I'd like to see this thing really get to moving. After this big gap up over this area should act as support, but we will see very soon if we even have to come back down and retest. Let me show you a couple more. I got a couple of stocks on here that I don't know, I'm just keeping an eye on, but there's not a whole lot going on, guys. I mean, you have this set up on RUM, but I don't like the numbers. Real never broke out of this $10 area. This would have been a nice base breakout right here, but it decided to climb on back down, and now it's going to see if it can hold this support. If it doesn't hold this area, it's going to be looking like bears are in control. Now, healthcare, that we have AXGN. I really like this basing top. Very nice. It's at its lows. It's trying to hold the 21-day moving average. If it breaks below that 21, I'm not going to really care for this, but as long as it stays within that 19 and somewhere around the $18 area and gets tight, I think this would be a good one as long as healthcare continues to climb. And then CDNA, I really like this. I really like that's creating new higher lows here, and it's starting to get tighter. I don't like to see where it came from, not the prettiest thing. But if we're looking at healthcare, I think the health technology, this one has it's a cigar butt. One last puff. I think this thing can get going. But really, my eyes are on RBRK and Kava. So Kava is creating a nice handle right here. My best case scenario, I did, one of these right here where it comes up and it kind of does one of these. I would be totally fine if it did one of these, or if it did the same thing, but down here. And if it does, I want to be a part of it. The 10-day moving average has caught up to it now. We have the crossover, the 10 crossing over the 21. We have the 21 crossing over the 50. So they're all lining up now. If we can catch something, we could consider this to be the handle, and we could take this trade after it breaks out from this area. So I'm just going to go over here, and I'm going to go ahead and plug this in for myself. So when there's an alert and it climbs just above this 143, 144 area, it'll alert me so I can go there, see what kind of volume is being traded on Kava, and get ready to take something like that. But I tell you, it's been a hard one to trade so far this year. The market has been very volatile, and you guys can see that. It's been a lot more volatile. You can see, in this area, it's been pretty choppy, pretty gappy too now. Like, see all these gaps down, gap up, gap down, lots of gaps. So it's very volatile. You got a lot going on. But, the market always seems to come in these patches of volatility, unless we're just constantly printing money, we're not seeing, sustained simple growth. We're always getting these fluctuations, the Japanese carry trade, deep seek popping in here, everything's just evening itself out. So, some people, they like to talk about, this is the next thing, or this is if you use technical analysis and you just look, we're on a very nice, easy trajectory on the 200-day moving average. It's rising. We're in this perfect channel here. We're right in the middle. We could go either way and it still be pretty comfortable, in my opinion. The overall market's just looking great. So when I go through the scanner like this, I don't see anything great going on. All I see are the few stocks that I've traded are continuing to work. They're continuing to go higher, but I'm not seeing a lot of setups this week. So I hate to be the bearer of bad news. And if you think there's some better setups, let me know in the chat. But I do have a couple more we can go over really quick, and a few that I want to touch on. So I can't help but look at this, even though it is definitely a China stock. TIGR really looks like it's starting to set up here. This might be a fun one for the $1,000 account challenge that I forgot about. But, if this thing really starts to ramp up, when we start to get some volume coming in here right at this top, we really could get going. My only issue is, I think it's going to get kind of stomped on somewhere in these areas. I still feel like there's a lot of bag holders up here, but if the volume comes in, it really can get this thing pushing. I think it can get going, but it's just kind of one of those scary pieces of Chinese garbage. OKLO, this thing, I just wanted to touch on it. It thing continues to rip. It just keeps on going. It's great for its space. Obviously, I didn't play anything like this because they have really garbage financials, and I know that that's not what this stock's about. But we're gonna see. We're gonna see what happens with OKLO. I don't mind playing. I wanted to play this base out here, but it didn't get tight enough for me. It wasn't an A+ setup. But again, the market doesn't care what I think. It's ripping. So if you like gold, I really think that this has potential to set up this beautiful cup with handle. I think it's forming the handle right here. Just before I forget, let me throw IAG on my alert list right here. Setting my alert. There, it's done. So IAG, this is gold. If you like gold, if you like where the metals are going, this is a nice stock, and it's a quicker mover too, 4.6%. It's hard to find good gold stocks that actually move. And then ARM, I found ARM to be looking more of the leader in the chip race right now. I know it's crazy to think, but I'm not saying one's better than the other or not. I'm just saying the ticker itself looks good. I mean, it's holding up really well. Sorry, my charting's a mess right now. Get rid of some of these anchored VWAPs here, but ARM's really holding up. It's really holding up here. It's creating these new higher lows, new higher low, new higher low, new higher low, new higher low. Bada bing, bada boom. If this thing gets to ripping, I mean, I wouldn't be too surprised. ARM is looking very strong. Next is Dave's too. This is what I like. So if we have a basing breakout right here at this top, and we just draw a line here, we say, well, we got a basing breakout. It broke out. Well, now it's coming back down to retest. I think Dave's has the numbers to prove it, as well as the technical analysis. I think if this thing really does start to catch a bid here and starts to curl upwards, we might have ourselves a tasty little trade. So we'll see on that. I need to put my alert on that one. Let's see. At or below. Okay. And I got two more for you. HSAI, I like this basing structure. It's sitting right at the top. The numbers to prove itself, but I think this was another China stock. I don't really remember. Let me just take a peek. Yeah, it's Shanghai, China. And then I wanted to go over this with you too. This is a 3X bull, DFEN. Your boy, the beefiest of Stewie. He pointed this out. This is just 3X leverage, and it looks like a nice bull flag going on right here. So if you're into the aerospace defense, this is exactly up your alley, as it's a 3X leverage ETF for that. And at this area, I just really like this trending look right here. So if you're like the aerospace, you think aerospace is going to continue to rip, this is your ETF to try and do it in. Now, I made this one a little bit shorter. I hope you guys loved it. I try to make it a little bit more clear, quicker, get right to the point. There's always so much more we could talk about, but I want to do a quicker format so I don't bore everybody constantly. So I hope you like it. If you did like it, leave a like, hit that subscribe button, guys. We do this every Sunday, and we do our Discord meetings every Wednesday. We hope to see you in there. And remember, you're a loser unless you're learning. Take care, guys.